In today's show, Bitcoin price breakout due relatively soon as Bitcoin volumes spook traders. In today's show, I'll be breaking down the latest technical analysis and quoting crypto analyst Mikhail Van de Popp. A breakout is coming relatively soon for Bitcoin. And quoting Rec Capital, previous periods of high sell-side Bitcoin volume preceded periods where buyer volume started trickling in the following weeks. But now we're seeing that A, seller volume is declining over time, and B, no Bitcoin buyer volume has come in following the high seller volume. And as shared here by Plan B in his latest update, wow, 28% thinks that the halving cycle is dead. In my opinion, we either front run or pump again. It will not stop after 3 spectacular halvings. Bitcoin stock to flow ratio will jump from 55 to 110 after the 2024 halving. Investors will notice that Bitcoin will be scarcer than gold and real estate. Facts. And stock to flow model also predicts a Bitcoin price of above $500,000 post-halving in 2024. Let's go. And breaking news just in, the Portuguese parliament rejects a bill to tax Bitcoin and crypto, as well as more breaking news. Paraguay is very close to regulating Bitcoin and crypto mining. Also in today's show, Swift probably won't exist in 5 years, says the MasterCard CEO. That's right, Michael Maybach, the CEO of MasterCard, told an audience of blockchain executives that he expects Swift to phase out of existence in as little as 5 years' time. Also in today's show, JP Morgan places a Bitcoin fair price at $38,000 and declares crypto a preferred alternative asset. That's right, JP Morgan placed Bitcoin's fair price at $38,000, which is 28% higher than its current level. And according to a note the bank issued to its clients on Wednesday, it shared the following: the past month's crypto market correction looks more like a capitulation relative to last January/February. And going forward, we see the upside for Bitcoin and crypto markets more generally. Also in today's show, analysts who accurately predicted the Bitcoin and crypto collapse details the rock bottom target price for the King Crypto. Quoting Crypto Capo here, Bitcoin, some of the reasons why I think we should see new lows in the coming days. Number 1, Bitcoin broke the $30,000 support zone, which was the main pivot of the bull run. This is a zone, not a level. It's between $29,000 and $31,000. Now it's testing that zone as resistance. And number 2, the minimum target of the bear flag hasn't been reached yet at $23,000. You can also see this on altcoins, where some of the main targets haven't been reached yet. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. The goal is to get to 100,000 subs, and if you like getting that crypto, be sure to smash that subscribe button and ring that bell to turn on all notifications to receive daily premium crypto news alerts every single day, just like this. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. How's it going, crypto fam? Make some noise in the live chat. The Bitcoin disappointed the bulls on an upside prior to the May 26th Wall Street Open as Bitcoin returned under $29,000, as you can see here in the Bitcoin 1-hour candle chart. Now, data from Cointelegraph Markets Pro and TradingView tracked an uninspiring day for the King Crypto, with $800 of losses coming in a single hourly candle several hours before the start of the trading. And Bitcoin had avoided volatility on the release minutes from the United States Federal Reserve Federal Open Markets Committee. These had avoided any serious divergence from already known facts about economic policy, and despite concerns of anti-inflation measures which could lead to a recession, no mention of the word recession appeared in the minutes, and even the legacy markets remained comparatively cool, with analyst Dylan LeClaire describing the situation as eerily calm based on volatility data. As he shares here, eerily calm out there. Shout out to on-chain analyst Dylan LeClaire. And for Mikhail Van de Popp, who on May 25th predicted a move towards 32,800 for the King Crypto, he reiterated that a breakout from its current trading zone was coming relatively soon. Checking out his original tweet right here. Bitcoin broke through 29,400 and ran towards the next resistance zone. If we hold 29,400, we'll be good towards 32,800 finally. And then he updated us here. Breakout is coming relatively soon for Bitcoin. And if we combine that with FA, then we can clearly assume that jobless claims, PCE inflation are going to be the trigger. If inflation slows down or jobless claims are fine, then the Fed might be slowing down the policy. And for the meantime, however, on-chain signals meant that there was likely no impetus for significant price changes. According to fellow trader and analyst Rec Capital, analyzing the on-chain volumes, it became clear that neither buyers nor sellers were prepared to make a bold statement at the current levels. Quoting the crypto analyst here, previous periods of high sell side Bitcoin volume preceded periods where buyer volume started trickling in the following weeks, but now we're seeing that A, seller volume is declining over time, and B, no Bitcoin buyer volume has come in in following the high seller volume, which you can see here in this chart. Now let's discuss the NVT Golden Cross, which is a long-term metric designed to catch price tops and bottoms using volume, which just flashed red this week as it appeared that on-chain transactions were not significant enough to support even the $30,000 levels. Now let's discuss the alts. Altcoins presented a mixed bag on the day, with Ethereum noticeably amongst the weakest of the major top crypto tokens, with the exception of the May 12th wick. Ether/USD traded at its lowest in 10 months on May 26, hitting $1,815 on Bitstamp. That's right, and quoting Mikhail Van de Popp regarding Ethereum, well, Ethereum got towards the range low. The question will be whether we can bounce from here and break the $1,940 level. If that happens, I am assuming we'll continue to $2,050. If it doesn't, then the markets are looking at below $1,800. Probably. And he also shares overall weakness in the markets as altcoins are dropping down heavily. That will probably continue the coming period unless the overall sentiment switches. In that case, focusing on USD pairs until Bitcoin dominance tops out at around 50 to 52%. And he also shares here, it's standard, but the crazy 10,000% gains or 20,000% runs start when you literally have zero confidence in the markets. The bear market period is actually the period where winners are made. Touche. And checking out this recent poll by Plan B, creator of the Bitcoin stock to flow model, he shared Bitcoin jumped after 20 halving as predicted. Question is, will Bitcoin pump again after the March 2024 halving, or will we front run, or is the halving cycle dead? In which 49.7% of you said we will pump again, 27.8% of you said the halving cycle is dead, and 22.5% of you said front run. Now he just updated us here in regards to this poll and wrote, wow, 28% thinks that the halving cycle is dead. In my opinion, we either front run or pump again. It will not stop after 3 spectacular halvings. Bitcoin stock to flow ratio will jump from 55 to 110 after the 2024 halving. Investors will notice that Bitcoin will be scarcer than gold and real estate. Facts. And someone responded, tagging me in Plan B. I think that the next cycle top will come between 1 year and 2 years from now, with peak between $135,000 and $190,000, depending on when exactly we make it there. You can call that front running if you like, but I don't think the halving matters much now. So there you have it. What are your thoughts surrounding the post-2024 halving? Do you feel we'll likely hit a $500,000 plus Bitcoin price by that time, as Stock to Flow predicts? Let me know your honest thoughts in the comments right down below. Now for some breaking news. Portuguese Parliament rejects bill to tax Bitcoin and crypto. Let's go. As well as Paraguay, very close to regulating Bitcoin and crypto mining, mass Bitcoin adoption. Bring it. And before I break down next story of the day, SWIFT probably won't exist in 5 years, says MasterCard CEO. But first, let's take a quick look at the overall crypto market. As you can see, all the major cryptos are currently correcting. And in the red, Bitcoin down 4.3%, trading just above $28,200, while Ethereum is down a whopping 10.3%, trading at $1,754. You also have Binance Coin, XRP, Cardano, Solana, and Polkadot in the blood red, which is definitely not a good sign. But all right, now let's break down our next story of the day. MasterCard CEO Michael Maybach said on Tuesday he does not expect SWIFT, one of the most widely used platforms for cross-border fiat transactions, to even exist in 5 years' time. Maybach was speaking at a panel session on the central bank digital currencies as part of the Global Blockchain Business Council Blockchain Central Davos Conference, which ran adjacent to the World Economic Forum 2022 in Davos, Switzerland. That's right, you can see actually a picture taken from right here of kicking off the event. Now check it. Towards the end of the panel discussion, when the moderator asked each panelist whether they thought SWIFT would still exist in 5 years' time, Maybach caused the audience to gasp in shock. After answering no, the response was not to be expected, given his position at MasterCard, and that the panelists before him, including John Frost, a senior economist at the Bank of International Settlements, and Jennifer Lassiter, executive director of Digital Dollar Project, an organization tasking with exploring a United States central bank digital currency, had answered in the affirmative. Now, other panelists following Maybach also took the affirmative viewpoint, including the CEO of Digital Asset, a data technology company, and David Treat, director of Accenture and co-lead of the company's blockchain business. Cointelegraph approached Maybach immediately following the panel discussion, but was denied any further comment on the subject. But later, a MasterCard spokesperson downplayed Maybach's comments in an email statement sharing the following: "Let us clarify the intent of the onstage comment, as it's not as simple as a yes or no answer." Michael was simply reinforcing what SWIFT had previously said. Their operations continue to evolve. Its current form will not be the same in the future. They are adding more functionality and moving past just being a messaging system. Sounds like they're just trying to save saved their butt. He already predicted Swift won't be around in the next 5 years. Very interesting, right? Now check this out. Swift processed 42 million messages a day last year, but transactions on the network can take several days to complete, which is a joke. The company has been striving to maintain its relevance in the international economic order, especially in regard to CBDCs. Now to this end, Swift has been exploring the use of CBDCs to facilitate seamless cross-border payments from as early as May 2021, when it released a joint paper with Accenture looking at how digital currencies can help cross-border payments. Now on May 19, 2022, Swift announced a second round of experiments involving CBDCs, collaborating with French IT company Capgemini to explore the linking of domestic CBDCs to facilitate seamless cross-border payments. As they shared here in this tweet, we're collaborating with Capgemini to explore how Swift can interlink with multiple domestic-based CBDC networks emerging worldwide to make cross-border payments with digital currencies more seamless and frictionless. Now, Cointelegraph reporters on the ground at Davos noted that in another panel session titled Rules of the Road for Digital Economy, Maybach talked about the role regulation can take in reducing the unnecessary noise around the nascent technology like crypto. Quoting him here, not everyone is screaming for regulation, but it does reduce the noise in the crypto world. Engaging actively with regulators and being principled, I am optimistic, he said. So there you have it. What are your thoughts surrounding the future of Swift? Do you think it will be around in the next 5 years? Holla at your boy in the comments right down below. And before I break down next story of the day, JP Morgan places Bitcoin fair price at $38,000 and declares crypto as a preferred alternative asset. But first, let's take a quick look at the overall crypto market cap, sitting just above $1.2 trillion with 81 billion in volume. In the past 24 hours, the Bitcoin dominance still on the rise at 45.5%, with the Ether dominance at 18.1%. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we have Terra UST, the not so stable coin, currently up 21%, trading just above 8 cents. We have the Sandbox up 7%, trading at $1.34, and Decred up 4.5%, trading at $36.37. And now checking out the top 100 cryptocurrency gainers in the past week, you can see WEMIX up 116%, SFM up 65.2%, and Monero up 16.1%, but the majority are in the blood red and big losers for the week. But all right, now let's break down our next story of the day. JP Morgan has placed Bitcoin's fair price at $38,000, which is currently 28% higher than the current level of around $29,000, according to a note that the bank issued to its clients on Wednesday. Quoting them here, the past month's crypto market correction looks like a capitulation relative to last January/February, and going forward, we see upside for Bitcoin and crypto markets more generally, the note said. And bank strategist Nicholas was the lead author of that document. Now, a bank investor's note placed Bitcoin's fair value at that same level in February when it was trading at around $43,000. At that time, crypto has surpassed real estate as a preferred alternative asset for the bank, along with hedge funds. The note continues and reads the following. Thus far, there's little evidence of venture capital funding drying up post-Terra's collapse. Of the $25 billion venture capital funding year to date, almost $4 billion of that came after Terra. Our best guess is that venture capital funding will continue, and a long winter similar to 2018-2019 would be averted. Now, venture capital funding would be critical to be avoiding the crypto winter, it added. And on the same day, venture capitalist Andreessen Horowitz announced the closing of its fourth cryptocurrency fund at $4.5 billion. Also on Wednesday, crypto-focused venture firm NGC Ventures launched its third blockchain fund with $100 million raised from investors that included Babel Finance, Hobby Ventures, and Nexo Ventures. Now, JP Morgan CEO Jamie Dimon has repeatedly expressed his personal antipathy towards cryptocurrency, going as far to call it a fraud, as we all know, but the bank itself has taken a more practical stance. It became the first major bank in the metaverse earlier this year, and Dimon has praised crypto for its cross-border payment facility, because as we all know, don't listen to what they do, but watch what they do, because they will lie to your face, but they can't lie by their actions. You feel me? And before I break down our final story of the day, analysts who accurately predicted Bitcoin and crypto collapse details the rock bottom target price for Bitcoin. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 1,200 plus videos right here on my YouTube channel. Also, some very helpful resources for you to plug into, including my crypto merch store live at merch.cryptonewsalerts.com. wicks.net. Also be sure to smash that subscribe button and ring that bell to turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And of course, you can follow me on all the major podcasting platforms, from Spotify, home of the Joe Rogan Experience, to Apple's iTunes and Google Play. And if you're listening to the pod, be sure to check out the YouTube channel at cryptonewsalerts.net for the full premium experience with video. And we're currently receiving over 500,000 downloads per month with the pod, so I greatly appreciate your continued support. And of course, you can follow me on crypto Twitter, Facebook, Telegram, and TikTok. So wherever you're at, be sure to plug in and follow me there. But all right, now let's break down our final story of the day. The crypto analyst who predicted Bitcoin would crash this year is revealing what he thinks will be the bottom price for the benchmark crypto. The synonymous crypto trader Capo tells his 319,000 Twitter followers he expects Bitcoin to plunge further as the crypto asset drops below key support level. As he shares here in this Twitter thread, some of the reasons why I think we should see new lows in the coming days. Number one, Bitcoin broke the $30,000 support zone, which was the main pivot of the bull run. This is a zone, not a level. It's between $29,000 and $31,000, taking all the wicks. Now it's testing that zone as resistance, and he continues. Number two, the minimum target of the bear flag hasn't been reached yet at $23,000. You can also see this on altcoins where some of the main targets haven't been reached yet, which you can see here in this chart. Number three, funding rates have remained neutral / positive all the time. For a bottom to form, you want to see very negative funding rates. We haven't seen that yet. Also, open interest didn't show a capitulation candle. No big drop on open interest, which you can see here in this chart. Number four, alt perp is no man's land. It broke the key level, and the next support is 35 to 40% lower. This matches with the main targets of most alts and would make a lot of sense. Number five, SPX and US dollar currency index. SPX is really bearish. It's breaking support like butter, and the bearish trend is getting stronger. Meanwhile, the US dollar currency index keeps making higher highs and higher lows. It broke the previous highs and is using them as support now, as you can see here in this chart. Number six, heat maps look bearish. You can clearly see much more supply than demand, and some of the demand is getting weaker and moving lower. Some examples right here. And also, he concludes with this right here. This is a brief explanation of some of the reasons why I think we have yet to see new lows. I'm still out of the market until the main targets are reached or until I see bullish signs. Good luck to y'all. So there you have it. What are your thoughts surrounding his rock bottom Bitcoin floor price between $21,000 and $23,000? Let me know your honest thoughts in the comments right down below. Now for a quick recap of what I covered with you here in today's show. Bitcoin price breakout is due relatively soon as Bitcoin volumes spook traders. I also shared that Swift probably won't exist in 5 years, according to the MasterCard CEO. Also in today's show, we discussed JP Morgan placing the Bitcoin fair price at $38,000 and declaring crypto as a preferred alternative asset, as well as analysts who accurately predicted the Bitcoin and crypto collapse details the rock bottom target price for the King Crypto. But where do you feel the Bitcoin price is likely to go next? Let me know in the comments right down below. Now for the top 3 comments from yesterday's episode. Pokemon wrote, "Hey JV and Crypto News Alerts fam, enjoyed your video full of information and your intelligent insights. Great time to buy Bitcoin at these prices. Buy and hodl. Keep missing the live show, but I will still watch it later. Take care one and all. God bless. You and yours. You got it fam. Hodl gang." In full effect. Now for our next featured comment coming from John Bonici, "The least important factor for an investor should be price. A more important factor is time. The most important is patience. Thanks for the information, value of your streams. You make a great point fam. Patience is virtuous. One love." And our third and final featured comment comes from Tony Hilton. "Man, all these targets are previous supports. It just keeps plunging. So as a Bitcoin skeptic, how do you convince me that it's a good crypto? Because it's number 1 in market cap? I'm hard pressed to find any other reason it would pump if it had utility. Talking about price only is just not when the economy isn't doing well." Thanks for tuning in, Tony. Great questions. Well, as a Bitcoin skeptic, first and foremost, I don't want to convince anyone to invest into Bitcoin. I'm not a financial advisor. You either see it or you don't. But regardless, if you're going to invest into cryptocurrency, obviously Bitcoin is the safest bet and it's the fastest horse in the race. That, my friend, is a fact. And to be featured on tomorrow's episode, drop me a comment right down below.